Hey everybody, Rob Booker here. A lot of you have been wondering how the recent crash in the markets has been affecting me. Well, not much at all. Anyway, big news, right? So in today's video, I want to talk about how someone might go about the process of trading this crash, this stock market decline, or this recession or bear market using the currency market. So let's jump on over to the charts. All right, so let's take a look at the charts. Now, a couple of things that you got to get out of the way is that in many instances, the stock market will lead the currency market. Sometimes the currency market will lead the stock market, but usually the stock market's going to lead the currency market. But that's not as important as my next point, which is this, that the S&P 500 or the indexes are highly correlated to the Japanese yen. For example, if we pull up a comparison here on the charts and we just simply add the S&P E-minis because they're continuous to a certain extent. So we'll go ES1 and see if we can add that as a comparison. What you'll notice is on the chart in front of us right now, you will see that as the Euro Japanese yen goes down, so goes down the ES or the S&P E-minis. Now occasionally you'll see a jump up in the S&Ps like right here, and the currency market continue to drop. That's exactly what I'm talking about when I say that the stock market might lead the currency market. So we could see a little jump up in the currencies, in particular the Japanese yen, because the stock market jumped up a bit. But it's going to be a delayed reaction in most cases. And that allows us to, for instance, if we want to, we could take a short-term buy trade on a day where there is a little bounce in the equities market. We could take a short-term buy trade in a Japanese yen currency pair to benefit from that bounce. But that's getting ahead. There's another point to all of this. And here's what the point is. And it's a mini lesson in fundamentals and economics. So here's what happens. The Japanese yen and to a certain extent the Swiss franc are what are called safe haven currencies. When stock markets are going up, these currencies go down. And when the stock market goes down, these currencies go up. So, for instance, let's say stocks go up. The Japanese yen goes down. Now, why would that be? That's because people or institutions borrow Japanese yen at low interest rates, and then they invest that money in stocks. It's basically, when there are really low interest rates and a rising stock market, it's like a free return. Borrow money cheap, put it in stocks, those stocks go up, and then you can pay back those loans, which were at very low interest rates. It's kind of like a win-win, and that's why when interest rates are low, the stock markets of the world just go up. People borrow Japanese yen and then put it into risk assets like stocks, real estate, and other kinds of things. But the converse is also true, and there's huge opportunity for those of us that want to take advantage of it. When stocks start to go down, here's what happens. Traders who have borrowed money in Japanese yen have to pay back those loans in yen. So they sell those stocks, and the stock market goes down. And then what they start to do after is they start to buy Japanese yen with the proceeds of that so they can pay back those loans. Well, what does buying Japanese yen do? Well, buying Japanese yen makes the Japanese yen go up. And that's exactly what we see happening when the stock markets crash. We see the Japanese yen go up. So, when we're watching a crash, how is it that we can trade or use this to our advantage? And that's when using some indicators comes into play. So what I've got on the chart here in front of us right now are these indicators that we've been working with recently in recent YouTube videos. So if you've missed my recent YouTube videos on pi pivots, you can find those videos linked below, or you can just type that into the search box on YouTube and you'll find that video on pi pivots. And these charts are tradingview.com charts, and we're looking at the euro yen. So let's say that we want to take advantage of the fact that the market's moving into bear territory and we are going into a recession-minded economy, and stocks will rise now and then, but then probably drop back down. So how do we take advantage of that? Well, let's for a moment here just forget about the stocks, because we know now that the stocks are in bear territory and we don't need to do these comparisons any longer. So we can just turn those off and we don't need to look at those any longer. But what we do want to look at are times when the currencies show us that there's been a brief pop, a move upward, and we can sell into that. Well, let me give you an example. So as the stock markets decline, every once in a while we have a jump upward in the euro yen, or basically what is essentially a recovery for stocks and a recovery for risk assets. Remember, stocks down, Japanese yen goes up. Stocks up, Japanese yen down. So here's what happens. Today, the stock market recovered a little bit, and what should probably happen after the fact is that the euro yen will recover a little bit. It will jump up a bit. Remember, when the euro yen is going up, the euro is going up, but the Japanese yen is going down. So what we can do here is wait for price to hit or rise up to its daily pivot on days where that's possible, and then sell into that. So look at this. Almost every single day in a down market where the euro yen will rise to its daily pivot, those are great selling opportunities. So the first way is to sell at daily pivot because we're in a bear market. But there's other things that we can do. These levels, which we talked about just the other day, this is S3. And the market will almost never hit S3. 1 out of 40 days, it will hit S3. But if it does hit S3, these are huge buying opportunities because the currency market is essentially exhausting itself and bouncing. And this is great for a risk-on trade or a bounce. And these are S3 levels with the pi pivots. And once again, there's a link below this video to show you how those are calculated, and you can even grab that indicator for your tradingview.com charts. If you don't use tradingview.com, I don't know what to tell you. It's just, listen, I can't build indicators for everybody. Here's an example of what it looks like. That's a day where S3 is hit, and it's an exhaustion day. And that means that we're probably going to see a bounce when it hits that level. And that means that's a day when the stocks are up. That means the euro yen is up as well. And you could do this for the euro yen, the pound yen, the Australian dollar, Japanese yen. That's the worst AUD you've ever seen. All of those are going to go up on a day when stocks go up. But the converse is also true. So now we've got two different methodologies. In a bear market, we can wait for price to hit the daily pivot or at the daily pivot, and then we can sell. That's a really great first way to do things. The second strategy we have is a buying strategy when the market has exhausted itself, or when everybody's become so fearful they can't actually stand it anymore, and everybody goes to the sidelines, and those are great buying opportunities. So we can buy at S3. Those are both strategies worth considering. But the last one is, what would happen on a day when price in a bear market rose high enough to go to R3? Well, if this level were ever hit, that would mean that there was a massive spike and a massive recovery. Remember, euro yen up, stocks up. But it's a bear market. So if these levels are ever hit, it's a sell trade big time. It's the biggest one of all the ones we've just mentioned. That would be where I would, one, sell euro yen, but I would double the size of my trade. Two, I would sell SPY calls. I would sell some kind of spread, sell the near-term calls and buy ones, a week out to offset that a little bit with the same strike price. I would just load up on that kind of trade. Or three, just outright buy volatility. Buy a volatility financial instrument. Buy a VIX. Buy whatever you can, because volatility is about to spike way up because stocks are about to go way back down all over again. So let's review here. We are possibly in what is becoming a bear market, where stocks usually go down. They start the week off positive and then end the week off negative or whatever, with brief interruptions in that process. Number one, number two, and number three are the three kinds of trades that we can take. We can do a buy at S3. We can do a sell at the daily pivot, which will happen 2 or 3 days out of 5, so that's a great one. Or we can sell a lot at R3. Those are three different strategies that we can use. And the reason that these strategies work, is that stocks are highly correlated to currency pairs that include the Japanese yen. So if stocks are up, the euro yen is up. And if stocks are down, the euro yen goes down. Now remember, for those of you not familiar with the currency market, when the euro yen is going up, that means the euro is rising, and it means the Japanese yen is falling. So this euro is stronger than the yen. So if stocks go up, once again to review, that means that investors are, if stocks go up, they are borrowing money in yen, selling yen, so it's going down, and then taking those proceeds and buying stocks. But when stocks are dropping, they are paying back loans in JPY. And so they buy JPY, yen, and they pay back loans. And that buying of the Japanese yen means the euro is going down and the Japanese yen is going up, and the euro yen falls at the same time stocks fall. So just as a review for those of you not familiar with the currency market, again, I'm going to say this a third time, and I know some of you are going to... Anyway, it's super helpful, and it's super good to remember this. Stocks up. Euro yen up. And also pound yen. And also Australian dollar Japanese yen up. Stocks down, then the euro yen and all those other ones are going to go down as well. But generally, this is the really cool thing. The stocks are going to lead the currencies. So if you see the stock market have a really good pop and a really good day, you can know that a great opportunity is coming in the currency market just a few minutes or a few hours later. All right, that's the hardcore technical analysis for today. I'm Rob Booker, so happy to be here together with you. I publish a video just about every day of the week at about 9 a.m. Central Time or a little bit thereafter. You can subscribe to the channel at the link on the side or below, and like the video or leave a comment. Always happy to hear from you. Bye for now.